News now, European shares touched a two-week high, extending last week's strong run with Eurozone economic data and U.S. policy decisions in focus. Meanwhile, Astral Foods expects its interim headline earnings per share to jump. The market reacted positively to the update, with Astral's share price surging more than 7%. Oil prices were little changed as Israel-Hamas peace talks in Cairo tempered fears of a wider conflict in the Middle East, while U.S. inflation data dimmed the prospects of interest rate cuts coming anytime soon. To give us more perspective on the markets, we are joined by Gary Boyson, who is from Rand Swiss. Gary, thank you so much for your time. How are you characterizing market performance at this stage?
Well, very, very positive. So we're up across the board. JSE All Share Index up about 1.3%, and it's really being led higher by the resource companies. So we have Anglo American Platinum actually leading the upside, up over 4%, and I suppose that's after Anglo American rebuffed the deal from BHP, and Amplats was going to be part of that unbundling, and it's recovering strongly now, although I don't think that we've heard the last of that deal just yet. Looking at the industrial index, that's up around 1%. It's really following the positivity that we saw in China this morning. Chinese property stocks doing incredibly well, just on speculation that there could be further stimulus. And then the financial index, up 1.5%. Also very, very strong performance. So green across the board. Lovely day. Peace talks, as you said, in Cairo. And even the yen, which has been on the back foot for a long time, touching 160 this morning. But some speculation that the Japanese central bank was in the market today, and the yen back to around 155. Rand dollar also a little bit stronger, so it's trading around 1874, and I can't believe I'm saying that's strong, and I'm optimistic at 1874. It seems like just yesterday we were at 14, but definitely a lot better than the 1920 handle that we saw a couple of weeks ago.
Let's talk about the FOMC meeting that we are expecting. When it comes to expectations or tone or messaging, what are you going to be paying attention to when Fed Chair Jerome Powell addresses the press in the room?
Well, I think certainly the guidance is going to be absolutely key. So we've had quite mixed messages out of some of the central bank governors, just around the timing of the rate cuts. So I think having a look at the dot plot is going to be absolutely essential. And looking at the market pricing at the moment, it's amazing to think how much this has changed, in the last 4 months. Coming into the year, I think we had Goldman Sachs predicting that we'd have 5 rate cuts. At the moment, if you look at Fed funds futures, there's a 20% chance that there's no rate cutting in 2024. From the U.S. Federal Reserve, and that's saying, if we look at the pricing, we're only expecting the first cut now in September, and we were quite optimistic that you might have even seen one last year if you look 2 years ago. So definitely, this taking a lot longer, this rate cycle, these higher rates around for a lot longer than a lot of people expected. And I think any clues on Wednesday as to when we could potentially see some relief will be welcome.
For me, it's not so much how much, that repricing has changed. It's how quickly it's changed in a short space of time. I'm wondering, when it comes to your rate views as Rand Swiss, what has changed? Have you also gone down to one rate cut or no rate cut at all?
Yeah, I think there's definitely discussions of no rate cut at all, in our research meetings. But I think our base case is probably still for at least one rate cut this year. Looking at it though, a lot of this has been data dependent. So what we've seen is inflation coming down very, very aggressively, and all of these rate cuts depend on your inflation expectations. And a lot of that drop has come from the good side of the economy as supply chains readjust. But what we have seen is that inflation has become a lot more sticky in the services sector specifically, and that's as you start to get expectations embedded in the number that we are going to have high inflation for slightly longer, and that becomes more persistent in the economy. We also obviously had those GDP numbers last week, worse than expected. So we're going into an environment where you're starting to see the underlying economy contract, but we haven't yet seen inflation come under control. And if that's the environment, that's kind of a stagflationary environment. Don't want to use that word, but that's unfortunately what it looks like. And then we have to see a little bit more pain, certainly from the economic side of things, before we are going to be able to see rate cuts, because you'll have to see GDP contracting, businesses going under, in order to tame that very high services inflation.
Let's talk about tech earnings that came out last week. What narrative are you picking up in terms of the figures that we got, and does that inform the state of play for this week?
Absolutely. So looking at it, I think the big message from tech at the moment is that AI is real and it's still very much in play. So we had the likes of Tesla, Microsoft, Google, Meta, all reporting last week. I think the real standout was Google's earnings. Stock moving up 10%, making it a $2 trillion company for the first time, and Google even declaring a dividend. But really saying that they're able to monetize, and we're seeing it in the revenue numbers as well. They are able to monetize the AI, the rollout of their Gemini, and you can see that in the figures. And I think that's what everyone has been concerned about. Very, very similar message from Microsoft, saying that the take-up of Copilot, which is their AI tool, has been incredible. Not as much of a bump in the stock price up 2% after results, but both very, very robust, just saying that they cannot service the demand for these products, and it really is going to take a lot of infrastructure rollout to build up. On the downside, we've got Meta. So obviously Meta through their Llama AI, not as optimistic as the other two. So we saw that stock price down around 10% after the earnings, and it really was just on a softer forecast, saying that they hadn't quite got it right yet in terms of monetizing their product. And then the likes of Tesla also reporting, and that's, it was been a very, very volatile stock lately, but, they talking, not in the AI space, although they are definitely an AI company, about the very realistic possibility of full self-driving vehicles. And, after Elon Musk addressed the market and kind of also, I suppose, downplayed the fears that they were essentially turning themselves into a robo-taxi company, and said that they were still going to be rolling out, the low-cost version of the Tesla. That stock also doing fairly well and seeing a nice recovery. So overall, US earnings at the moment, we've had about 50% of companies reporting. 80% of them have beaten estimates. So far, a good earnings season, and showing that these stocks are actually still a little bit too cheap.
When it comes to South African companies, there are those who are still publishing their earnings, their half years or their full years. What are you going to be paying attention to from corporate South Africa?
I think if only corporate South Africa was as optimistic as US companies, because every earnings result is, it's a very similar narrative. The discussion of the energy crisis, the discussion of high interest rates and how it's impacting consumers specifically, adding risk to the business, adding cost to the business as well. High inflation also, a persistent problem. But overall, a lot of these South African companies actually managing to weather a very, very difficult operating environment. So what you're really looking for in the South African space is for companies that are undervalued, and that even given the tough economic environment, the management teams are managing to navigate it and find the opportunities where they are. So that's really what you need to look out for in South Africa, because they're less optimistic. A lot of these companies trade at absolutely bargain basement multiples and can be picked up for very, very cheap, and you only need a slight bit of good news for them to re-rate a lot higher.
All right, Gary, thank you so much for your time. That is Gary Boyson from Rand Swiss. And tomorrow we're going to be paying attention to numbers coming out of Amazon in the US. On Wednesday, we've got the Fed meeting, and Thursday, markets are going to be paying attention to the earnings coming out of Apple. We'll keep you updated in terms of those particular dynamics. However, we're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.